After years of expansion, big tech is shedding thousands of workers. According to a widely cited industry tracker, as many as 200,000 tech jobs have been lost globally since the start of 2022. And the wave of layoffs has continued in 2023, with some of the industry's biggest names announcing cuts. 12,000 jobs at Alphabet, the parent company of Google, 10,000 at Microsoft, and thousands more at Amazon. Experts we spoke to say that the latest cuts are a continuation of this right-sizing.
I think the tech sector expanded significantly during the pandemic years with a view that the rapid revenue growth would be sustained. However, with the soft market conditions currently, this industry is currently adjusting his headcount accordingly.
At a time where they were expanding very fast, loans, liquidity was around, there was very low interest rates. As we move into times where there is inflation, where there's higher interest rates, there is a cutting back from investors of actually providing the liquidity required for expansion.
The shedding is expected to continue this year and even beyond.
It would happen throughout this year and possibly next year as well, because the companies themselves have to find a sustainable model. I think everyone here is trying to find the sweet spot, where you can actually retain and hire required skills and actually move and evolve your company into different sorts of businesses to capture different sorts of markets.
Wall Street is also feeling the heat. Banks including Goldman Sachs, Credit Suisse, and HSBC have also announced staff cuts. But overall, it's a mixed picture, as other banks are still hiring.
Sharp rise in the safe rate of return, which is the U.S. Treasury return, going up by 400 basis points through the course of 1 year, was a seismic hit to the industry. So the banks that relied heavily on, say, mergers and acquisition or fee-based activity saw that part of the business do poorly. Banks that are sort of large consumer-oriented banks saw their net interest margin actually widen, and they did better through the course of 2022. So the investment banks, the bread and butter fee-based activities, that certainly got affected. And that's the part of the banking industry where we are seeing some degree of consolidation.
With the global economy able to withstand the threat of recession better than most observers had expected, large-scale layoffs in other sectors are not expected either.
I think, again, right now it's hard to predict because there's a lot of negative news out there in the markets. We are still cautiously optimistic that these things will stabilize, especially when China opens up further. And hopefully that will bring about more positivity in the market.
I think a year ago, the fear was that as interest rates go up, we will find out that the global economy is not capable of absorbing the high interest rate because the debt burdens are so high, because consumers are so leveraged, and therefore we will see distress at the sovereign end or the household end, and as a result we'll see big recession with respect to demand, and that will lead to big layoffs. Many of those fears have not panned out. It turns out the global economy can survive with a substantial rise in nominal rates.
At the same time, there are bright spots for those searching for career opportunities, particularly in sectors that are benefiting from global economies opening up post-pandemic.
Plenty of bright spots. When we look at the service sector, whether it is aviation or tourism, there's still substantial demand. Anybody who's tried to buy a plane ticket or book a hotel room would know how capacity constrained those sectors are, and they are trying to hire as quickly as possible, as many as possible. And in banking, there are many pockets of opportunities. The VC scene is by no means dead. For entrepreneurs with interesting ideas, there's still substantial capital out there trying to find interesting avenues to invest in.
It's not the end of the road for the tech sector either. Despite layoffs making the headlines, companies are still actively hiring. The influx of tech workers into the job seekers market could even spell good news for smaller firms.
Despite the layoff, the tech firms are still investing selectively to future-proof their businesses. For example, we have seen Microsoft investing $10 billion in OpenAI, and will require relevant talent to support the business functions. Also in Singapore, we have seen the likes of Binance, ByteDance, Lazada, they are still looking to attract tech talents to join them.
There is a silver lining to this, you know. Tech talent spreading out, especially from the branded companies, you know, the Googles, the Microsoft, etc., into maybe for the smaller companies, SMEs, is an opportunity on both sides. The smaller companies, SMEs, are crying out for tech talent, and this is a chance whereby it's worth giving them a look, you know.